So what is going on, Jay? We're going to be doing our $500 account update. I think I see SYM up on the screen. That is a play that we went
Yeah,
over earlier. Actually, you had an entry at either break below, of course, and then 4 hour candle close above 37.22 and then 29.62.
well, what I'm seeing so far is that this is basically exactly what I was seeing before. So before we made this post, we were clearly trading higher because I said, yeah, let's wait until this comes all the way down to, at the very least, what is it here, 37.22. And now we've went below it, right? And now I'm just basically monitoring this on a 4 hour time frame candlestick closure basics. So very important to remember, we want to see a 4 hour now that closes above this level during regular trading hours. So that could happen today or that could happen later on this week. Anyways, SYM is looking good here to me. Not in yet, but when it reclaims 37.22, just a friendly reminder that we can then go long and we can put our stop loss below the low that is made here. Also as an alternative option to putting that prefix stop loss. So I believe you gave a prefix stop loss for that, but it's also definitely possible to put that stop loss tighter. So suppose it closes now above 37.22, then we could theoretically set our stop loss at 35.86. And so that would be a tighter stop loss, and that would allow us to go a bit more heavy on the position size to maintain the same risk. But anyways, this is something that I think is very important that we're on that is on our radar now. Just like I said with Robinhood last time, I literally said to you, dude, let's take a look at Robinhood and let's tell people that we told them. And then the SIM here is going to be hopefully the same thing. So this looks like a standard range deviation, and I would expect this thing to trade back to 47, 42. Actually, earlier today, I was looking at this again, and I very much just still stick with my previous two trade setups. I think they are looking good. The second one, we might not even get there because this isn't a macro uptrend. And this is very high on my radar personally this week, Symbiotic. Like you know that, Doug, but other people might not yet know that, is that we can put out the play and then it might take a day to enter or it might take 2 or 3 weeks. So we can be patient with it. But this is also the point where you got to be aware of what is the candlestick confirmation, because if you miss that candlestick confirmation, well, and you enter later on the line, you're simply late. You're not following the exact plan. So that's just very important to reiterate. We're also not a copy trading service, but if you want the closest results as possible, then you really got to be on the ball immediately when you get that confirmation. Otherwise, like I said, you're late and it is what it is, right? Of course. Yeah, 34.17 is the preset stop loss. So again, if this just closes above that level on the 4 hour, then that is indeed a preset stop loss. And I also believe that we kind of laid out the position sizing according to that stop loss. But anyways, today we won't really get into that. I just really want to update some charts and some plays. And Symbiotic, I think this is going to be a money maker for us.
Perfect. I love that.
Basically, just like this one, right? Robinhood, just a quick update on this.
Yeah, we're doing well.
Yeah, we've had a couple of instances where we've basically come back to our entry or even went a little bit below our entry, but at no point have we hit our stop loss. And I must say, I was looking at this earlier today and I was looking, how is this going to open up today? Are we going to see some strength here, or is this maybe coming back down to our entry once again? Now, I have to say, just the way that Robinhood looks here, that looks very strong. And I believe I told you and we updated that in the Discord, but at this point, it wouldn't make sense anymore to let Robinhood come down and for us to hold a position that is negative. Duck, you know it firsthand. You're looking at a position that is green. It wouldn't really make sense anymore at this point to let that position turn red on us. Now, we didn't immediately trail our stop loss to break even because you always get these instances where it might test your entry, but there's also just so many times that it needs to test your entry. So at this point, this thing really needs to continue to 23.74, and I would definitely say we're not holding anything in the red on that one. There's just no need for that.
So yeah, no matter what, even if we hit the stop loss at this point, it's just break even. So you're risking at this point nothing.
And this is also, I think, very important to reiterate, is that we are absolutely not a copy trading service. The goal is not that you just blindly copy these trades, but rather that you make decisions for yourself. So whether you want to trail your stop loss into profit and to guarantee you profit, or whether you want to put that stop loss at break even, or whether you want to do something completely different, is up to you. Just from my perspective, I wouldn't hold this in the red. Now, like I said, you could trail your stop loss into profit, but that is completely up to, I would say, the trader's discretion. That is something that we cannot tell you to do, of course, or tell anybody to do. But
Right.
that would be also a way. You could trail your stop loss into profit. Then if it comes down, you're guaranteed a green trade on Robinhood. So that's going pretty well. I don't know what I recalled on Robinhood saying for 23.74, whether I said that's a good target to get out 50% or 75%. Now,
Yeah.
I will say this. This is completely and 100% your own discretion. I'm not going to tell you how much you should get out of a position, right? I can't say that. I will, however, say that I'm going to pay myself there at 23.74, and I'm going to get out the majority of my long position. I
Gotcha.
am very well aware that people on Twitter are calling for maybe $60 again on Robinhood. And the thing is, that can happen, but we will then still be able to get into it again. So 23.74 is a good place, I would say, to pay ourselves and to ignore just the idea that, oh yeah, it can go so much higher, because it can also go way down lower. And then if you forget to take profit on a good substantial point of your position, right? Say
Yeah.
it gets there, you take out half and then it nukes back down. And meanwhile, Under Armour hits its stop loss. Well, it
Right.
would be then better that you've taken a little bit more profit on Robinhood. That would have buffered you from potentially hitting a stop loss on SYM. And all of this also goes to show how important it is not to be in too many positions all at once,
Mm.
especially because we are just focused on the long side. So for us, if the market has a bad day or a bad week or whatever, it could mean that multiple long positions are basically drawn down simultaneously. And that's of course not something that we like. We like to keep
Right.
our risk managed. Now,
We also have UA.
yes, I believe we have two active positions going on so far. So UA is actually something that I've been looking at this, right? And from what I remember previously, we had our stop loss at, let's see, what was that? 6.17, right? I believe 6.17 was our stop loss. That
Yep.
is still fine, but I will say this for UA. I'm looking at this level 663. It's very simple. We don't mess with our stop loss. We just leave it where it is for now. I will say this though. It needs to get, so if it's probably going to get below 663 at some point, and then we need to see it get back above on the 4 hour time frame. So what I mean with that is if I see that this thing closes below 663 again on the 4 hour, it might make sense to get out of this essentially. This is still risky and this might still very well come down lower. I'm zooming out on this, right? And this is still a downtrend. So it's by no means a problem to cut a position or even to cut a position a little bit earlier if you're not comfortable. This is something that I'm not 100% comfortable with. So then we'd rather take a smaller loss. Now, if anything, and you also know this from own experience, Duck, UA is indeed currently a little bit red. That's normal. That will happen. But Robinhood, our other position, is green and well up, making up for that. So I don't expect every position here to necessarily run to our target. But what I would expect is that our winners will outperform our losers. Now, one of the reasons why I'm not a huge fan of holding on to this if this is going to close a 4 hour below 663 is because we've clearly got an important. I've marked out a zone here. Why we'll come to the coaching to figure that out. But basically $7. We can keep it as simple as that. $7 is resistance, and we're below $7. So if we get below 663, then just get back above it, and it wicks there on the 4 hour. That's fine, and maybe we still run above 7. Now that's also the thing. We don't need. So it's not because we could get out of this position that we can't then play it anymore. So I'm also thinking to myself for Under Armour, right, after some reconsideration, like I said, $7 is an important level. It was a resistance there, turned into a support here. Now we broke it and it turned back into resistance. So if we are going to cut our position for Under Armour, if this closes below 663 on the 4 hour, which can happen, then I would simply look for a move above $7 and holding above $7 somewhere in the future. And then we can still play it, right? So what we're not going to do is we're not just going to have no stop loss or not respect it or just hold on and basically hold this thing back down. So for Under Armour, I don't know if this is a level that I've basically previously outlined or not, but 575 seems to be like a very good level to play from. And we're now at 672, right? So that means that there's a quite a good chance that this actually comes down a whole dollar lower. So instead of holding on for that, what we can do is we can wait for a move below 575 and then getting back above 575 again with a 4-hour closure to basically take a new long position. So I don't mean to fud your position, Doug, but I do want to make this clear that I think closing below 663 on the 4-hour can be an exit sign. And hopefully, by the time that happens, or maybe it doesn't happen, that's also fine, of course. But hopefully, at that point, our Robinhood position is going to have that much profit secured that this stop loss wouldn't matter, and that our $500 challenge account would still very much be in the green, right? I'd rather cut the position and then look at something entirely different altogether. So that's maybe something that we can then end with. So in terms of the update, we have an update on Robinhood, Under Armour, and then we went over SYM just to re-emphasize it, and we can go over maybe GameStop, I would say. But
yeah, well, Jay, I
by
have a
all
quick
means,
question. So
go
I
ahead.
understand the 575 level, like how you would play that, it goes below 4-hour close above. For
Yeah.
that's like the $7 level, where it's more of a breakout type level. What do you like look for?
A 4-hour candle that closes above $7 is like absolute minimal requirement, because not just a wick, right? Like we said, $7 is resistance. So if price comes to $7 and we buy or we get in more, chances are that we're at resistance again. So what we want to see is that $7 resistance gets broken. Now, waiting for a 4-hour candlestick to close above that level, I would say, is already a very good start. And then ideally what you see is that it comes back down and holds $7 as a support level. How that play would look, right, is you would basically wait. And again, what I would personally look for, I mean, come and check out the coaching. I will tell you exactly the candlestick I want to see play out. That's maybe not something to include here, but what would be very decent, right? A very decent position would be wait for a 4-hour close above 7. And then instead of doing breakout trading, we would simply put a limit long order at $7. So we would basically bank on the fact that it would retrace back to that level to turn it into support. Now, a good stop loss for that trade, so entry at $7, not a breakout trade, so first closing a 4-hour above it, then putting a limit order at $7, right?
Kind of like Robinhood, okay, like we did.
Very, very similar. Indeed, for Robinhood, you remember that as well. We closed a 4-hour above 20.9, and we placed a limit order at 20.9. And price picked us up and then basically went from there. So it's actually a very, very good remark there, Duck. Robinhood is not a position that we entered because we got below a level and then closed back above it. No, we actually closed above a level and then we put a limit long entry on that level. Very similar here to the setup for Under Armour. Basically an entry at 7 after that specific, like that's the best you could ever describe it, I think, to people, is if they've been following around with Robinhood, ideally they've been following along with at least understanding what we've been doing, that this is the same exact approach. So that makes a ton of sense to me. That's very well explained.
That makes sense. Cool. All right, perfect.
And if you need a target and a stop loss for that position that enters there at $7, I can give a preset stop loss suggestion at 649 and a target at 866 would be a main target. But we will keep updated on Under Armour for sure in some up and coming updates. So we'll see. For now, in 663 has to hold. It's not a stop loss on there, so our original stop loss can remain set. But we'll look at a 4-hour close below that level just to kind of de-risk our portfolio a little bit. It's very important that we keep that money to play potentially other things and to put it to work to the best of our ability. Realistically, we don't want to have a portfolio where things are just bred for weeks on end and basically pulling us down. Like a lot of people have struggles cutting a position because they're like, yeah, but look, if I sell the position, then I have a loss. Look, by the time that price is so much lower, you're already in a loss, right? People say, oh, you're only in a loss if you sell. That's a scam. No, you're already losing because the moment it's not because you don't selling that you can't lose. If you don't sell, you don't get that money that is locked up in that position to play something else. That is opportunity cost. So
Yep.
you're also losing there. So it's very important to get out as soon as things seem sketchy.
Mhm.
Now, we can always get back in the future and have our scenario prepared. So it's not because we sidestep UA. We're still prepared from 575 lower down or from $7 higher up. So pretty simple, I would say. For the people that have been in the Penny Boys server, they will have seen a trade setup on DJT, which is the Donald Trump company. I know that this is completely something different, but essentially what I was doing on DJT got us an incredibly good entry. And that was basically when we were trading somewhere very similar to where GameStop is trading here. Now, what I am thinking to myself and what I am personally going to allocate to is I want to see this get back below 17.7. So a lot of people have seen videos on Twitter and this and that. Oh, let's test 25. Oh, let's test 20. No, I want to get below $17.70. Why is that? Well, because a lot of people are going to have their stop losses trailed above these higher lows here. So that these are important points where there's going to be tons of stop losses below this. And no limit orders there, right? So what I want to see is GameStop get below 17.7. The moment it then closes a 4-hour candlestick back above 17.7, I'm really in that. And well, it's difficult to give a preset stop loss because ideally what you do, right, by the time you enter, it gets below 17.7, gets back above, right? You can basically put your stop loss below the low that is made below 17.7 and then trade it back up. So it's very difficult to give a preset stop loss on GameStop. So it's going to be really important if you want to follow along with this, that you can basically figure out that rule for yourself, basically to look what is the lowest point that we've gone to before we close this a 4-hour candlestick back above 17.7. That can be our stop loss. So again, with GameStop, I don't want to catch any falling knives. I need to see this bounce. This may very well go to zero. However, right, I'm just going to give you my honest opinion on GameStop, and I'll even draw out on the chart what I think is going to happen with this on the 4-hour. I think it's very likely that this thing indeed gets below 17.7, gets back above, and sees a massive rip back up that is ultimately going back to all-time highs. That is my thesis on GameStop. So that's very difficult for people to comprehend, right? Most
Yeah.
people see GameStop and they're like seeing this at 25.8. And then I'm here saying that it's bullish, but that I want to see this get below 17.7. That is something that is very far out for most people. Like, what do you mean bullish? Doesn't it mean that price just should just turn around and go up from here? No, that's actually not what it means. So it needs to get below 17.7, get back above, and then I'm very bullish on GameStop. Like truly and literally, I think, and I'm with it. I'm a technical trader, but I'm with it for the tech and I'm with it for the cause. And this looks like a very good setup to me, actually.
What would
Just
some targets be for that 1770?
ooh, some very good targets would be, let's see. Well, ideally speaking, this just simply runs back to $50 and then to the all-time high. But let's be reasonable with a first target, and let's say let's see what is the high of this candle here. So 30.5 could be the first target. 30.5. And the second target, look, at 30.5, this is what I would say. If it gives an entry and if that runs to 30.5, you're going to be severely up. I'm personally going to take the absolute vast majority of my position in there and then let the rest of that position run higher. At that point, right, the rest of the position running way higher. And what I'm trying to say is I'm not going to sell. I'm I'm not going to sell until the all-time high hits, but I am going to secure a good amount of that positions just so that trade is safe. So like once again, if we enter and this thing runs to 30.5, that's going to be a significant gain at that point. You can do whatever you want with that position, but I would say at that point it's a free runner essentially that can go as high as it wants to. And a very good target is simply the previous all-time high, which at least from what shows here on games on TradingView, that would be 120.75. So 120, but that is like an ultimate runner, and that is just something that can sit around. So say, for example, right, you have your position and you take out 90% there at that first target, or 80 or 90%, just because it's GameStop, it's risky, you want to pay yourself. The remainder of that position, right, it can run as far as it wants to. Now, I personally am looking at the GameStop chart in a very, very similar way than that Roaring Kitty actually looked at it on his stream. So that's also one of the things that I really appreciated. On Friday there, he seemed to like not really know what he's doing. And then he's actually going to a chart and he's marking out some levels, which at least the horizontal level that he marked out makes a ton of sense. I think literally what he did is he marked out the level. He said, look, it's coming back, it's testing that level, and it's bouncing back up. He was kind of memeing with technical analysis, etc., etc. But the man knows very damn well what he's doing. And yeah, that's my perspective. Like, even if we just zoom out here for GameStop, right? A lot of people are now completely attached to what everybody else is saying about GameStop. And I see a lot of people like giving negative comments about it, or saying like, oh, this makes no sense, or oh, I hate this. Look, that is not really the perspective that is going to lead you to making money here. What I find interesting for GameStop is very simply that it is an incredibly bullish chart, right? If I'm looking at this on the log scale, this is my chart, previous resistance. We've gone all the way down to being a penny stock, and then that stuff absolutely bolted above and 220. Now, if I put this on a monthly time frame, right? This chart is by no means bearish. This has a massive breakout, has many, many months coming back into support, and now is bouncing. So what am I looking at? Very normally a higher low here and then continuing the uptrend. This is I would say this is not even a more risky play. This is just as risky as you want to make it. So if you YOLO on some options, that is not at all what we're talking about here with an equity trade. But I do think that the GameStop chart is looking very, very good and solid. One thing I will also add for GameStop, if you want, is like a level way down lower, that if this thing would absolutely like break down, say that this completely breaks down, it hits stop loss, and then nukes significantly lower down, I'm looking at $5.60 as an entry point. So $5.60, move below, 4-hour candle close back above, and that can be an entry for GameStop, and then basically just playing it back to essentially targeting back to like $15-16, like to basically play this range on my chart. So $5.60 might become a very important level if we really nuke down. So you want to be prepared for that as well. That would be the next level to basically play from. So we have 17.7 main scenario, and if that all fails and it does drop lower, we'll look at 5.6 for GameStop as well, and probably get a very good risk reward play out of it somewhere in the future.
Yeah, speaking of the risk management for GameStop, for that 1770 play,
Yes.
what would like a decent allocation be for like a $500 account?
That's a very good question. Now, it depends on where your stop loss is going to be set, and that depends on how low the stock is going to go, below 17.7, before getting back above. I'm just, right, I'll just give you an example on how to calculate it, but it's not going to be accurate, so people will have to do it for themselves, essentially. So say that, again, it all depends on where even, so say we get below 17.7. Well, where is it going to close back above 17.7? We don't know yet, right? It could close at $18 back above, at $20 back above. It could close at 18.35 back above. So where we enter is still unknown. And where we put our stop loss is also still unknown. And those are the two factors that you actually need to know to position size. So you need to know, where is my entry? Where is my stop loss? And then basically you got to divide, then from there on, you basically need to position size. Now, for this as well, I think it makes sense to refer to the coaching section, in which I allocate like a full hour into really like diving deep into how to do this. But for some plays, like last time, we can give a preset stop loss and we can give an idea on how much money you're using. Now, again, I don't know what the stop loss percentage is going to be, but
Right.
it's basically just as well. I won't explain it here. I'll just keep it as simple as possible, and we can update this. So what we can do, Duck, is
Yeah.
at the point that this actually sets up, and at the point that we actually and that you actually get your alert, and you're like, Jay, is it time to enter? And I say yes. At that point, we can still let people know how much money we are allocating
Right.
from your $500 account, and then that also gives an idea, right? So that can be basically still to come. So that
No,
will
that's
be
a good point. And for those of you, who are listening and want to learn how to do all that, definitely
yeah,
check out Jay's coaching section. Like he said, he has a whole hour dedicated towards how to figure all that out.
risk management, position sizing, etc., etc. Yeah, absolutely.
But perfect. These updates were amazing. Is there anything else that you want to say on any of these? I think I got everything I need.
No, actually not. I think it's very important to keep our watch list to the point, to not really lose track. Maybe the last like bonus thing, right? Palantir is another one of these companies which we're simply waiting for, right? I know that we have a level there at 1725. We're very far away from that level, but it's just like SYM. So by the time we get to that level and below that level, then get back above, we will be there executing that. This is still very far away, but that doesn't mean that we forget about it. So we, by all means, we can keep all these previous plays and suggestions on our
Yeah.
watch list. And I think SYM is going to be the first one to give us an entry, probably is my guess. But no, that's about it. I really do appreciate you, Doug, for making this so simple for people to follow. You've really made it very clear in that Discord chat how to follow along, essentially.